Welcome, dear traders. You are watching a recap of the Asian session on February 6. Wall Street closed lower on a Friday, with the indexes wind down by statistics on the US labor market. Today, the stock market has kicked off the Asian session on a down note as well. US stock indexes came under strong pressure from data on non-farm payrolls for January. The job market added 517,000 jobs in the first months of 2023, far above the 185,000 consensus estimate. The services sector, accounting for more than two-thirds of US economic activity, also rebounded sharply. In January, the index rose to 46.8. The ISM non-manufacturing PMI increased to 60.4 last month. Against this background, the US dollar gained value. In addition, the fact that the unemployment rate dipped to a new half-century low in January suggests that the US has managed to avoid a recession. And now investors are looking forward to Jerome Powell's speech at the Economic Club of Washington and D.C. on Tuesday. Perhaps the statement by the head of the US Central Bank will provide market participants with some clues about the regulator's further plans. In the meantime, one thing is clear: the US Federal Reserve may stick to its aggressive policy path for many more months. This prospect, as well as the weak earnings reports from the US corporation, have led to fading optimism in the stock market, enabling the US dollar to take the lead. After Friday's broad rally, the US dollar extended gains in an early trade on a Monday. The index, measuring the value of the dollar against a basket of 6 foreign currencies, recovered from the 7-month low and settled at 103.1 in the Asian session. Supported by a sharp increase in non-farm payrolls, the US dollar index traded upwards in the Asian session. However, its price range of 103 and 103.20 was very tight. After all, a downtrend remained intact in the market. The index is expected to face resistance at the level of 103.40, as well as at the previous peaks of 105.60 and 105.80. The 101.30 mark may act as a support. Its breakout will open the way to the level of 100.80. Meanwhile, the dollar managed to recoup early losses against the euro, the British pound sterling and antipode currencies. The steepest gains were shown against the yen, and the greenback advanced to the area of 131.80, backed up by the events in Japan. According to today's Japanese media reports, Masayoshi Amamiya, who stands for the relatively loose monetary policy, is seen as a possible successor to the current central bank chief. At the moment, the official holds the post of the Bank of Japan's deputy governor. In response to the news, the pair has noticeably advanced since Friday. The US dollar has kicked off Monday with gains, trading in the range of 131.10 and 132.50, and the Japanese stock market in its turn has edged higher today, as a sharp weakening in the yen is beneficial to large exporters. The US dollar is also expected to make Japanese assets more attractive to foreign investors. Antipode currencies suffered heavy losses on Friday, and the risk-sensitive Australian dollar closed down, retreating from its January highs by 3.7%. However, Australia began the week under pressure from several conflicting factors. Therefore, its stock market slid slightly and the currency rallied. On the one hand, the market was supported by the intention of Australian Trade Minister Nonfarm to accept an invitation to visit Beijing in the near future. And this is the latest sign that relations between the two countries are thawing. On the other hand, the market is experiencing fluctuations amid the Chinese balloon saga and the US Secretary of State Antony Blinken's cancelled trip to Beijing. The Australian dollar, which is often used as a liquid proxy for the yuan, is unlikely to benefit from the slowdown in the Chinese economy. However, today the Aussie is getting support from red-hot inflation, which surged to 7.8% in the fourth quarter of 2022. And the Reserve Bank of Australia is expected to lift the rate by 25 basis points at its meeting on Tuesday, and thus bringing the rate to the highest level since September 2012. Less than a day is left until the central bank meeting, which may turn out to be the most aggressive on record. Until then, the Aussie is likely to consolidate against the US dollar. In the early trade on Monday, the pair was holding in the daily range of 0.6891 and 0.6950, moving slightly upwards. At the moment, the Australian dollar continues to rise toward the area of 0.6926. The further trajectory of the Aussie will depend on the pace of a monetary tightening by its central bank. Meanwhile, the New Zealand dollar is unlikely to gain support from its regulator. The thing is, the Reserve Bank of New Zealand started raising interest rates much earlier than its Australian counterpart. That's why the Kiwi opened this week in the red zone between 0.6306 and 0.6336. In the Asian session, the quote pulled back to the level of 0.6323. Apart from the Reserve Bank of Australia meeting, traders will also focus on the inflation data in Germany and China that is due to be out this week. In addition, the UK will release its GDP growth rate for the fourth quarter, while Canada will publish the unemployment rate. We keep close tabs on the market to provide you with the most up-to-date analysis and news. Leave your comments and questions below, and thanks you for watching, and see you soon.